Amigos y amigos, buenas tardes. Es para mí un verdadero placer darles la bienvenida a la Fundación Rafael del Pino, a esta primera edición en España de la Central Banking Series, organizadas por el Global Interdependent Center, el BBVA y la Fundación, en las que hemos contado además como impulsor de la iniciativa con Manuel Balmaseda, al que no veo, que nos acompaña. Sí, Manuel, a quien me gustaría agradecer, Manuel, a quien me gustaría agradecer muy especialmente el liderazgo que ha tenido en la puesta en marcha de este encuentro, que estoy seguro que será el primero de muchos otros en los que volveremos a encontrarnos tanto el Global Interdependent Center como la Fundación y el BBVA. Por ello, de estas organizaciones no puedo dejar de agradecer también a Mike Drury, a George Secos, que nos acompaña en la mesa, a Don Rhys-Miller, y por supuesto a Jorge Sicilia de BBVA y a José Manuel González Páramo y Rafa Domenech, que también nos acompañan, ¿no? En mis breves palabras de bienvenida no puedo dejar de manifestar la satisfacción y el agradecimiento de la Fundación. La satisfacción por ver cumplido uno de los objetivos fundamentales de esta Fundación, que es contribuir a la formación de los dirigentes españoles, ¿no? Sin duda alguna, las valiosas opiniones de nuestros invitados nos permitirán comprender mejor la situación económica y financiera internacional en la que se integra nuestra economía. Y como digo, de agradecimiento a los organizadores que ya lo he mencionado, pero también, como no, a nuestros invitados de esta, José Luis Marcolina, a David Attig, a Sullivan, a Livio Straca y a José Manuel González, que han sido tan amables de desplazarse a nuestro país para contribuir con sus acreditadas opiniones al debate. Mantendremos una continuación en el que, como he dicho, fijaré especialmente en estas políticas monetarias convencionales que caracterizan la actividad económica del mundo. Este evento se desarrolla en un momento en que vivimos en nuestro país incipiente recuperación no exenta incertidumbres global. Las últimas conferencias que hemos desarrollado en la Fundación y en los encuentros que estamos manteniendo, expertos tratan de analizar pues, en las razones que subyacen a esta recuperación, las mejoras introducidas en la gobernanza y la regulación de nuestra economía, se ha unido ese viento de cola que impulsa en términos de bajos tipos de interés, tipos de cambio favorable, factores entre tantos que están favoreciendo que se consolide esta recuperación. Pero evidentemente no es mi papel en estas cuestiones. Tenemos expertos acreditados en todas estas cuestiones que nos acompañan, y por eso también concluye simplemente mostrando de nuevo la gratitud de la Fundación a organizadores, a ponentes y a todos ustedes por su asistencia y por hacer posible de esta forma estos encuentros. Gracias. Jorge, tienes la palabra.
We have had, and we will have this afternoon, people from the ECB, from the Federal Reserve, from other national central bank, and from the private sector, in order to be able to, first of all, understand where monetary policy is right now in the developed economies, what is the impact that it's having internationally, what are the limits of the current monetary policy, where would we be in case these monetary policy decisions had not been taken, and of course, what are the consequences and what are the risks. So what we wanted to share with you this afternoon is a big piece of of the answers to all these questions, and we welcome you very much, and we're happy to be sponsors of this gathering. Thank you.
I want also to welcome you all to this wonderful meeting that we have. It's an event that we organize with the sponsorship of BBVA and, of course, with Rafael Del Pino Foundation. I'm very grateful for having the opportunity to collaborate with these wonderful institutions. My name is George Tsakos. I have served as the chair of GIC in the last 2 years, and I'm a board member. Our organization is an organization that advocates global dialogue on matters related to economics. We hold conferences and panel discussions, and we provide a forum for objective way in which we analyze global economic issues. One of them is, of course, the quantitative easing and monetary economics. Our organization is located in Philadelphia, hosted by Philadelphia Federal Reserve Bank of Philadelphia, in Philadelphia. And I can tell you we are very privileged to be here with you, supported by those two organizations, because it gives us a great, unique opportunity to share ideas and thoughts about global economic issues. And we do believe that the world is co-integrated, fully integrated, and that's why it's the title of our organization is the Global Interdependence Center. I want to recognize at this moment our Vice Chair of Programs, Don Riesmiller, who is with us and who is he worked very, very hard to make sure that the program was established the right way and work with our sponsors. I look forward to this wonderful discussion that will follow, but it is my privilege now to introduce to you our speaker, the first speaker, Jose Luis Malo de Molina, was born in Santa Cruz in 1950. He's a doctor in economics, and actually he's a wonderful academic. He has graduated from UCM, and he was a lecturer for a number of years until 1985. He joined the Banco de España Research Department in 1982 as an economist, where he held various positions of responsibility. He was director of the Monetary and Financial Studies Department until July of 1992. In July of 1992, he was appointed Director General of the Banco de España Economic Statistics and Research Department and a member of the bank's executive committee. He's accompanied the governor of the ECB Governing Council meetings and established in the ECB rules and procedures. I had the privilege to meet him just before in a private lunch that we had, and I enjoy very, very much his questions and his statements about the monetary issues here in European Union, and I can't wait for his comments. Thank you.
Thank you very much, George, for your kind presentation. It's obvious that we are living extraordinary times for monetary policy all around the world. And you are discussing today these topics in depth and from different perspectives. And I am sure that the relevant steps taken by the ECB is one of the most relevant issues at stake. I've been asked to speak in Spanish in order to the majority of the audience, but I can move to English if in the question and answer. I have my presentation prepared in English, but the slides are in English, but I make the presentation in Spanish. Voy a hablar de un punto particular de las medidas de política monetaria tomadas por el BCE, que me dé el punto de apoyo para hablar sobre la situación de la economía española en su proceso de ajuste y de reforma, que entiendo que es un punto relevante para las discusiones de política monetaria que se están teniendo hoy aquí en este foro y relevante también para todos ustedes. El quantitative easing, la relajación cuantitativa en la que ha entrado el Banco Central Europeo recientemente, está siendo una medida muy exitosa, está ayudando a recuperar el crecimiento en el área del euro, en todo el área del euro, incluyendo los países previamente estresados, y está siendo útil para revertir la tendencia en las expectativas de inflación, de tal manera que una situación de riesgo de tasas de inflación muy bajas por un periodo de tiempo muy prolongado, estamos entrando ya en una tendencia hacia tasas de inflación algo más elevadas que apuntan hacia la posibilidad de que en el horizonte de medio plazo, de 2 años o 2 años y medio, la inflación del área del euro pueda estar cerca, por debajo, pero cerca del 2%. Cuando se entra en ese tipo de política monetaria, que está siendo útil, está siendo muy beneficiosa, sin embargo existen algunos riesgos. Y uno de los riesgos que voy a tomar como punto de arranque para mi presentación es que esta política monetaria ultra expansiva con bajo tipo de interés puede ser utilizada como una excusa por algunos agentes económicos y políticos para relajar el esfuerzo de ajuste y el esfuerzo de reformas estructurales. Y yo creo que nuestro país es un claro ejemplo de cómo la relajación cuantitativa y las políticas monetarias expansivas son complementarias del esfuerzo de reforma estructural y no sustitutivas. Y que, por el contrario, cuando el buen aprovechamiento de estas políticas monetarias expansivas exige, de alguna manera, continuar y profundizar en las políticas de reformas estructurales. En el Banco de España, de hecho, hemos hecho alguna investigación en la que encontramos evidencia de que cuando se entra en situación de expansión cuantitativa, las reformas estructurales no solo tienen efectos positivos a largo plazo, cosa que es obvia, sino que incluso tienen efectos positivos a corto plazo. Y esto es lo que me da pie pues, a contarles a ustedes un poco dónde nos encontramos en el esfuerzo de ajuste y de reforma en la economía española. Es bien sabido que la economía española sufrió durante la etapa de expansión previa a la crisis un conjunto de desequilibrios, problemas de competitividad serios, un déficit de cuenta corriente masivo, excesos de endeudamiento del sector privado, crecimiento excesivo de los precios de la vivienda y un sobredimensionamiento del sector residencial y del sector financiero. Todos estos desequilibrios hicieron a la economía española colocarse en una posición muy vulnerable cuando se desató la crisis de la deuda soberana y cuando se desató la propia crisis del euro. De hecho, en el año 2012, la economía española se encontró en el epicentro de la crisis y en aquel momento, en el año 2012, tuvimos salidas de fondo de la economía española por un valor de 400.000 millones de euros, cuando nosotros necesitamos por lo menos entradas de capital, entradas de fondos por valor de 300.000 millones de euros al año, dado el alto nivel de deuda externa que mantiene la economía española. Afortunadamente, desde mediados de 2013 la economía española ha entrado en un periodo de crecimiento. Llevamos 7 trimestres consecutivos creciendo, con tasas intertrimestrales cada vez más altas. La del último trimestre ha sido un 0,9%, con una tasa interanual del 2,6%. Y de hecho, España ya es la economía más dinámica de las 4 más grandes del área del euro. Y nuestras previsiones, las del Banco de España, son que este año podemos crecer en torno a un 2,8% y el año que viene en torno al 2,7%. Es decir, entramos en una etapa de recuperación sostenida y esta recuperación está apoyada sobre todo en la demanda interna, el consumo, la inversión privada y por lo tanto tiene visos de ser sostenible. Esta recuperación, en mi opinión, tiene 2 pilares. De uno voy a comentar poco y de otro voy a comentar un poco más. El primer pilar es la superación de la crisis del euro. Sin duda, en el año 2012 o entre 2009-2012, la crisis de la deuda soberana llegó a poner en duda la propia supervivencia de la moneda común. Afortunadamente, las medidas tomadas a nivel europeo por el Banco Central en el terreno monetario y por las autoridades europeas en el terreno de la construcción de una unión económica y monetaria más completa, más sólida, más genuina, donde la unión bancaria fue un paso enormemente relevante, permitió poner fin a superar esa etapa de crisis, y eso sin duda fue enormemente positivo, enormemente importante para la economía española. En concreto, sirvió también pues, para resolver el problema que teníamos con la fragilidad o con los problemas que habían aparecido en un segmento de nuestro sistema financiero. Al hilo de la unión bancaria, la realización de los ejercicios de medición de la calidad de los activos de nuestro sistema bancario y las pruebas de tensión sobre la solidez de nuestro sistema bancario pusieron de manifiesto la superación de los problemas de inestabilidad financiera de nuestro sistema bancario. Todos estos cambios se han manifestado en una mejora sustancial del riesgo de la economía española, de la prima de riesgo de la economía española. El gráfico de la izquierda es enormemente ilustrativo, para el público español es muy conocido, para nuestros colegas procedentes de Estados Unidos o de otros países quizá no lo es tanto, pero la reducción de la prima, dramática reducción de la prima de riesgo de España es muy ilustrativa de la mejora que se ha producido como consecuencia de la superación de la crisis del área. Y eso ha permitido también mejorar radicalmente la confianza en la economía española, como se ve en el gráfico de la derecha. Por tanto, este es un pilar en el que se asienta la recuperación. El otro, que voy a dedicar más tiempo, es el que se corresponde con la corrección de los graves desequilibrios que habían colocado a la economía española en una situación de vulnerabilidad. En concreto, 4 de ellos. El mercado de trabajo, en el que se concentraron las mayores distorsiones y donde finalmente se consiguió una moderación de costes y una creación de empleo. La desinflación competitiva, que ha permitido restaurar la competitividad de la economía española y enderezar el déficit exterior. El ajuste en el sector residencial y finalmente la consolidación fiscal. En todas estas áreas se han conseguido avances importantes, y estos avances se han hecho en un contexto, en un marco particularmente difícil. Yo creo que en estos momentos se están cosechando los resultados de los esfuerzos de ajuste y de reforma realizados en la economía española. Brevemente me voy a referir a cada uno de ellos. En el mercado de trabajo es donde se concentraban el mayor número de distorsiones en la economía española. Y eso de alguna manera se manifestó en un crecimiento masivo del desempleo. Afortunadamente, las reformas que se han introducido en el mercado de trabajo han permitido finalmente alcanzar una senda de moderación de los costes laborales, como se puede ver en el gráfico de la izquierda, y esa moderación de los costes laborales, unido también a mejoras en los tipos de contratación y en los mecanismos de negociación colectiva, han permitido el inicio de una etapa de generación de empleo, de creación de empleo. El gráfico de la derecha es bien ilustrativo de la caída sistemática del empleo durante toda la crisis y cómo ya en los últimos trimestres la economía española está creando empleo y, lo que es más importante, está creando empleo a un ritmo superior al que justificaría el dinamismo de la actividad de acuerdo con nuestros estándares históricos. De alguna manera, reflejo de que ha habido un cambio estructural en el funcionamiento del mercado de trabajo. En el terreno de la competitividad era en uno de los que teníamos más serios problemas. Desde que entramos en el euro se produjo un desajuste significativo en cuanto a la relación de costes unitarios del trabajo en relación al área del euro, como se puede ver en el gráfico de la izquierda. Y ese desajuste, como se ve en ese gráfico, ha sido reabsorbido prácticamente en su totalidad. Ese desajuste, ese gap, ha sido absorbido a través de un proceso de devaluación interna. Un proceso de devaluación interna que es particularmente difícil, puesto que la tradición en nuestro país, antes de entrar en el euro, era que los problemas de competitividad siempre se terminaban reabsorbiendo a través de la devaluación del tipo de cambio. Déjenme que les cuente una anécdota en relación con la dificultad de hacer una cosa tan complicada como una devaluación interna. En el año 2009, en el Banco de España tuvimos una conferencia monetaria y vino a esa conferencia monetaria Agustín Carstens, gobernador del Banco de México. Y cuando le contamos la dificultad en que nos encontrábamos y la necesidad de hacer en España una devaluación interna, él puso el siguiente ejemplo. Hacer una devaluación interna es como intentar pintar una casa, pero en vez de mover la brocha para pintar la casa, mover la casa entera, la brocha fija y mover la casa entera. Eso es lo que es un proceso de devaluación interna cuando no se puede recurrir al manejo del tipo de cambio. Tengo que decirles que hace 2 meses Agustín Carstens estuvo otra vez en el Banco de España y reconoció que esa tarea tan difícil o casi imposible se había realizado. Me parece que esto es bastante ilustrativo de las dificultades implicadas en un proceso de esta naturaleza. Como resultado del ajuste de la devaluación interna, que ha sido tan importante en España, esto ha permitido dar la vuelta a nuestra cuenta con el resto del mundo. En el año 2009 teníamos un déficit exterior de 10 puntos de PIB, un récord histórico, 10% del PIB, y como se ve en el gráfico de la derecha, pues después de este ajuste competitivo interno, hemos entrado ya en una zona, en un periodo de superávits en las relaciones con el exterior. El sector de la vivienda es posiblemente el culpable número 1 de que la crisis en España fuese comparativamente más severa que en otros países. El desajuste, los excesos en precios y en inversión en el sector inmobiliario. Bien, ¿dónde estábamos en la corrección de ese desequilibrio? Los gráficos que tenemos en esta diapositiva son muy ilustrativos. El ajuste en precios de vivienda ha sido muy significativo y probablemente se ha alcanzado ya el fondo en el ajuste de precios de la vivienda. De hecho, los últimos datos ya apuntan a aumentos en los precios de la vivienda. Y la inversión en vivienda, medida por el gasto en la construcción de nuevas viviendas, que alcanzó un récord también histórico antes de la crisis, en la época en la que en España se construían en un año más viviendas que la suma de Francia, Alemania e Italia juntas, será la inversión que había en vivienda antes de la burbuja, en una situación en donde ahora estamos muy por debajo en cuanto a inversión en vivienda de lo que es nuestro patrón histórico e incluso de lo que son los patrones habituales en otros países. De tal manera que, por lo tanto, el ajuste también en cantidades, no solo en precios, en ese sector también se ha completado, como se ven en estos 2 gráficos. Unas palabras también sobre las finanzas públicas. En el terreno de las finanzas públicas, como consecuencia de los efectos de la crisis y como consecuencia de las políticas que se adoptaron para combatir la crisis al principio, pasamos de una situación de superávit en las cuentas públicas del 2% del PIB a un déficit público en el año 2009 del 11% del PIB. Es decir, un giro de 13 puntos del PIB en solo 2 años. Un récord también en cuanto al deterioro de las finanzas públicas. Enderezar esa situación sin duda requería esfuerzos de una enorme dimensión. Y había que hacerlo además en una situación de recesión en el que las políticas de consolidación fiscal tenían un efecto contractivo sobre la economía española. Pues bien, a la vista de este gráfico podemos concluir que el enderezamiento de las finanzas públicas en ese contexto adverso se ha hecho en lo fundamental. En 3 años, los 3 años anteriores a este último, el ajuste medido por la reducción, por el esfuerzo estructural, por el aumento en el superávit primario, o por la reducción del déficit estructural primario, de 6 puntos en 3 años. También un esfuerzo de pocos precedentes. Y gracias a este esfuerzo cabe esperar que en los próximos años las finanzas públicas puedan colocarse en posibilidad de alcanzar los objetivos de estabilidad. Bien, a pesar de los resultados que está dando los ajustes y las reformas, los riesgos y los retos que tiene por delante la economía española son muy significativos. De hecho, el nivel del PIB, el nivel de renta per cápita y el nivel de empleo en la economía española se mantienen todavía muy por debajo de los niveles que teníamos antes de la crisis. Y no digamos, el nivel del desempleo está en unos niveles inaceptablemente elevados. Esas 4 variables en esta diapositiva son un buen testigo del enorme legado, el pesado legado que la crisis económica deja sobre la economía española y la dificultad que su digestión en el tiempo tendrá. Por no mencionar, para terminar, el legado en términos de endeudamiento. Como consecuencia de la crisis, el nivel de deuda de la economía española aumentó mucho y estamos en unos niveles de alto endeudamiento. La deuda pública, primer gráfico, se disparó como consecuencia de los déficits y de algunas de las medidas de reestructuración de algunos sectores que hubo que abordar, y todavía, a pesar del esfuerzo de consolidación fiscal, todavía no se ha estabilizado. Todavía está creciendo. Cabe esperar que a finales de este año, al año que viene, empecemos a estabilizar la proporción de la deuda pública en relación al PIB. La deuda privada, empresas y familias, los gráficos 2 y 3, ya ha avanzado sustancialmente el proceso de desapalancamiento. Aumentó mucho la deuda y la deuda ha ido disminuyendo. Es verdad que ha ido disminuyendo sobre todo a través de la reducción del crédito. Y es verdad también que el desendeudamiento del sector privado se ve dificultado por el bajo crecimiento nominal de las rentas, por el bajo crecimiento nominal del producto, sobre todo cuando tenemos inflaciones muy bajas o incluso inflaciones negativas. Como consecuencia de ello, el cuarto gráfico, la deuda externa, la deuda frente al exterior, que era muy alta, como dije ya antes, cerca del 100% del PIB, sigue siendo todavía muy alta. Por lo tanto, esto quiere decir que a pesar del camino recorrido, la agenda de política económica y la agenda de reformas y de ajustes que tiene pendiente la economía española es todavía una agenda muy exigente y que, por lo tanto, la satisfacción de los resultados que se cosechan por los esfuerzos realizados debe ser acicate para continuar profundizando en esas reformas y no para que sirva de excusa para parar ese esfuerzo reformista. Y con ello concluyo con un punto más general que tiene que ver con el contenido monetario de la reunión que ha servido de excusa para esta convocatoria. Nuestro país, lo que está ocurriendo en España, repito, es enormemente ilustrativo de la complementariedad entre políticas monetarias expansivas y esfuerzo de reformas estructurales. Hemos cosechado los resultados de los esfuerzos de las reformas estructurales y las medidas de expansión cuantitativa tomadas por el BCE en nuestro país debe acompañarse también de una continuidad en estas reformas. Tenemos evidencia de que en nuestro caso estas reformas están reduciendo, están facilitando el comportamiento de la economía, incluso en el corto plazo, porque las reformas ayudan a mejorar las expectativas, las reformas ayudan a mejorar las condiciones financieras y las condiciones de crédito, porque las reformas ayudan a hacer los ajustes de precios y ayudan a la valoración del colateral. Y por lo tanto hay una complementariedad entre estos dos elementos. Y por lo tanto espero que estas reflexiones sobre el papel que las reformas estructurales, las políticas de reformas estructurales desempeñan en relación a la política monetaria pueda ser útil para las reflexiones de política monetaria que están teniendo en estos días lugar aquí en este foro. Y nada más por mi parte, estoy a su disposición si quieren alguna pregunta o si...
Okay, it's a pleasure to be here with my with my second round today, so please bear with me. We have a very high quality panel now on central banking issues. We have with us three outstanding central bankers. So let me refer very briefly to each of them. I will not read the full beta. You have this documentation with you. But let me first refer to Mr. Sullivan, to my right. He is in charge of research and is Executive Vice President of the Federal Reserve Bank of Chicago. He is also an academic by training and academic by exercise, I understand, because you have some academic assignments. Second, we have with us Mr. David Altig. He's Executive Vice President and Director of Research of the Federal Reserve Bank of Atlanta, also an outstanding academic and in charge of research, and on top of it, in charge of overseeing regional executives of the bank's research department. I have to say with a lot of contention that by chance the Fed of Atlanta is the supervisor of BBVA Compass, so I will be extremely restrained in my comments. And last but not least, we have with us Livio Straka. We were colleagues in the past. Livio is dealing now with international matters at the ECB. He is a highly regarded researcher with also training in law, which is adding to this discussion also this more encompassing perspective. So in the interest of time, if we could do the first round in, let's say, 15 minutes each, and then let's strive for that, so that we have enough time to I'm sure, a very enlightening discussion. So I don't know if there is any pre-assigned turn.
Alphabetical.
Okay.
All right, I'll start. Well, I'd like to thank the foundation and what do I have to do? Hit that thing.
Yeah.
There we go. I didn't know it was self-service up here. So I'd like to thank the foundation and GIC and BBVA for putting on this wonderful event. My job and Dan's job is to talk about U.S. monetary policy, which appears to be shifting gears about now. So let's stipulate three things that I think we can all agree on. If you just take a head count of the people who actually matter in the Federal Reserve, the probability that the interest rates are going to be, policy rates in any event in the United States are going to begin to rise this year is very high. Second stipulation, and again, that's not me speaking, I'm just counting heads. Second stipulation is if and when is going to be data dependent. And the third stipulation is, who knows what that means. So I'm going to give you one perspective on what that might mean. It is not the perspective of the Federal Reserve System. I'm obliged to say that for sure. I'm also supposed to say it's not the viewpoint of the Atlanta Fed as well, and that's just in case I mess something up. But I'm going to try to faithfully render our view of things from Atlanta, as I'm sure Dan will from the Chicago Fed. So what does data dependence look like? Well, it doesn't look like now. It certainly does not look like first quarter growth, GDP growth in the US economy. which the advanced number came out to be about 0. That's going to be revised later this month. It will be revised again next month. And right now, as of today, the estimates for what the revision will look like are something like minus 0.8 percentage growth. That is, we're going to get a number that said the U.S. economy contracted in the first quarter. That's what it looks like. That's the macroeconomic advisor's estimate as of today's retail sales report. And the tracking estimates so far for second quarter look like they're running under 2%. Now, how seriously should you take second quarter tracking numbers? Not at all. There's no data. It's a pure guess. I'm just saying, as we sit here right now, data is not in hand that would make us confident that liftoff is imminent, unless we can explain why that number is 0.2 heading to something negative. So I'll try to do that. There's one. I don't know if you visited the States, January, February. It was cold. How cold was it? So there's an agency that puts together the information on telling us how cold we are. The National Oceanic and Atmospheric Administration, and 7 out of 9 of the big geographic areas in the United States actually had significantly colder temperatures than normal. Now, what does that mean? Well, we try to, we threw that into a model, sort of the measurements of these weather effects, this cold weather, heating and cooling days. And according to our estimates at the Atlanta Fed, which are very similar to estimates other people are coming up with, that subtracted about a little better than half of a percentage point off of first quarter GDP. So was it the weather? Yeah, there was some of it. But it's a long way from, here's what we are projecting for the year, 3%, to minus something by just appealing to weather. So we've got to go farther than that. And what do we end up with? Well, first of all, let's sort of dig in to what the story was of the first quarter. The story was the following. Consumer spending was positive, but kind of lackluster. Investment in equipment, software, residential structures, houses, pretty weak. And really, really weak was structures investment, business investment on structures, and net exports, our trade picture. So therein lies the story I'm going to tell very quickly here. The story of what it will mean to trigger that data-dependent confidence, at least from my point of view. And it has to do with these observations of weak investment in structures, weak net exports, and weak consumer spending. So here you go. Here's the picture that's important for a lot of this. You all know it. Since the middle of last year, we've seen 2 really dramatic things. Decline in the price of oil, increase in the value of the dollar, none of which we were expecting. How do those things matter? Well, they matter in the following way. Energy independence, we are finding, is a decidedly mixed blessing. Since I was in high school, energy independence in the that was a long time ago. It was the 1970s. Energy independence has been the holy grail. That's what we were after. And lo and behold, we are increasingly making that a reality in the US. But it creates some dynamics in the economy that maybe we weren't quite expecting. And here's a picture that I think is fascinating. And before I saw it, I didn't appreciate it. The green line there is the fraction of investment on business structures in the US that's accounted for by energy development, mining and energy. Since 2000, it's tripled. It went from under about 10% to about 30%. And the blue line is just the broader measure of investment also about tripled. So over a span of about 15 years, investment in energy development has exploded in the United States, which means it's no longer the case, as you might have argued before 2000 or so, that a decline in the price of oil was an unambiguous positive for the US economy. Because now we're producers, not just consumers. We've made some attempt to figure out exactly what this means quantitatively. So here's a picture of an experiment. And here's what the experiment is. Start in the middle of last year and set oil at $100 a barrel and then drop it down to $50 a barrel. What happens to, in this picture, investment in structures and investment in equipment and soft business fixed investment more generally over time. And what you see there, the blue line, that's investment in structures. It falls a lot. It does not really come back if oil prices stick at that level. So these are the cumulative percentage point effects of these changes, and it bottoms out at about a 20 percentage point decline in business structure investment. Turns out when you drill a hole in the ground, it's a structure. That's the way this works. Over the course of 2015, and in fact, if you look at this magnitude of oil price change in our experiments, it's a negative effect on business fixed investment for the entirety of this year. It eventually turns positive, but for a protracted period of time, it's a drag. Now, this doesn't say investment is negative. This is relative to the baseline where oil prices didn't drop. But there is a substantial headwind that this very positive long-run development creates. Here's what it means, same experiment for GDP and consumption. And the important thing maybe is to look at that orange line, the real GDP line. And according to these experiments, again, at $50 a barrel, of course it's about 65 now, but at $50 a barrel, GDP suffers as a consequence of this through the middle of this year. This is, in some sense, a temporary effect because eventually it turns positive, but in the near term, it's something the economy is actually fighting against. Now, of course, if the oil price jumps back up, as it has, this effect gets mitigated. So one of the things we have to do to sort of figure all this out is to figure out the persistence of the oil price changes. We turn to the Energy Information Administration, and you guys may recognize the kind of dotted lines as confidence intervals. So they tell us that with 95% probability at the end of this year, the price of oil will be between $40 and $100 a barrel. So take it to the bank. So do we expect to see much of a positive effect on investment for a bit? Maybe not. Maybe not. And in fact, add to that the appreciation of the dollar. This is a much more familiar sort of story, and it is very clearly hitting net exports. Again, something that in the long run isn't necessarily bad for the US economy or any economy, particularly if it portends strength of some sort. But it is creating another one of these headwinds that is going to make export sector, people who are participants in the export sector sad for a while. And another long run, not so bad thing, but short run difficulty that the US economy has to drag against. So was part of my story. Part of my story was, we saw in the first quarter weak investment. We saw in the first quarter really weak net exports. Are those pictures going to turn around? Are those the things that I'm going to require out of the data before I'm saying we're on track to like a 3% growth trend I'm looking for? Answer, I don't think so. Certainly not by June, probably not by September. I don't know by when. Here's what I am looking for. Consumer spending, that weak consumer spending bit, it doesn't quite add up. doesn't quite add up. And here's what I mean by that. Here's another little experiment we ran. We took what we felt were the fundamentals of consumer spending, basically its own past history, energy prices, employment and unemployment, confidence measures, all that sort of good stuff. And we fed it into a model and said, what would we predict the last 4 months of consumer spending to have looked like based on those fundamentals? That's the red line. And you can see the red line is about 3 percentage points above what it is we actually saw. So this is why this is tricky. It's tricky because there's some stuff that I actually am not going to be very surprised if it looks very sort of weak as we go through the next quarter in any event. Investment spending, particularly on structures, net exports. What I do expect to see, and I'm going to be sorely disappointed if I don't, is some bounce back in consumer spending. With that thought in mind, we got the retail sales report today, as I said, as I noted. It wasn't so great. It is not was not really consistent with a bounce back in that picture. So here's the deal with being data dependent. Here's the deal with a forecast. The probability of a forecast that I make being right is precisely 0. If it could be less than 0, it would be. That's not why you construct a forecast. You construct a forecast because it tells you, it gives you a narrative. It gives you a story about what it is we should be looking for to figure out if we got it right. And I think that if we got it right, we'll see it in consumer spending, maybe not in a bunch of other stuff. And if we don't see that, we're going to have to rethink. Maybe it's got something to do with wages and all that sort of things, but that's Dan's territory, so I'll hand that to him. Thanks.
Thank you. Oh, you have. Okay, can I help it?
Oh.
Yeah. Do I make it happen? Are my slides gonna? Okay, great. Okay, thank you very much. I'm really happy to be here. This has been an interesting event, and the previous one as well. GIC and the foundation have done a great job in putting together a really informative set of events. And Dave did an excellent job covering, basically what's been going on in the real economy. And I'm going to try and talk a little bit more about basically the outlook for inflation in the U.S. And Dave also noted that the leadership of the Fed has said that we're likely to raise rates, but we're data dependent. And in fact, the FOMC really points to 2 things in terms of what would be the trigger to allow us to finally raise interest rates after all these years. The first being continued improvement in the labor market, which I'm pretty optimistic about. And then secondly, a reasonable confidence level that inflation will be heading back to our 2% target. And I'm also reasonably confident that we'll get there in the long run, but I'm going to actually talk quite a bit about reasons why it's difficult at the moment to have a lot of confidence that inflation is going back to where we want it to be. First, this is the data on GDP, the data that Dave was just talking about. We had a big pothole in the first quarter. It's going to look even worse once the statisticians get finished with it. But if you ask all the forecasters around the economy, pretty much everybody's expecting a bounce back, and I'm not going to actually try and argue with that. I think it does highlight that there's some uncertainty over things, and Dave brought up some interesting points to be watching for, but the basic story seems correct to me, because the fundamentals seem like they should be pushing us forward. In particular, we've had strong employment growth over the last couple of years in the U.S., which has been very gratifying. In March, the numbers were a little bit lower than people were hoping for, but they bounced back in a pretty good way in April. So that makes me feel that the improvement in labor markets is continuing. That should fuel the consumer, plus the low energy prices. So basically, I think we ought to be getting a bounce back in the real economy. But the bigger question is whether inflation will do what it's supposed to do. And I put the data there. The red line shows the overall level of inflation as measured by our PCE price index. The blue line shows the core inflation measure, not because we don't care about total inflation, but because it's often helpful to look at the core measure to really see where the underlying trends are in the total measure. And you can see that we've been below our 2% target essentially for 6 years straight. And that's not something that the central bank really ought to do. We ought to have a target. If we set a target, we ought to be credible and actually be in position to achieve our 2% target. So, in fact, recently we've had a big drop in total inflation because of the drop in energy prices. That's not perhaps as worrisome as the fact that core inflation has remained below where we want it to be for such a long period of time. Now, the dots in that graph show what the median FOMC participant thinks is going to happen. And what you can see is they think we're headed back to 2% in a reasonable time frame. If I was allowed to put my own dot down, my dot might not get to 2% quite as quick as some of those, but the basic idea is reasonable to me. But the point I want to emphasize is that inflation forecasting is difficult, and we don't have a great track record of it recently. So what I put up here, the blue line is the actual data, and the green line are the various forecasts that we've put out at different time periods. And what you can see is that typically we're expecting it to go back to its target level, but typically that doesn't happen. At least it hasn't happened for some period of time. So I think we should be at least a little bit humble about our ability to know that we're headed back to 2% inflation. So the threshold for saying that we're reasonably confident, I would say, is reasonably high. Okay? But why do you expect inflation to head back to target? I think there's two main reasons. One is the tightening labor markets, where we went from a really, really bad situation where labor markets had very high unemployment to a point where we're much closer to full employment now than we were. And secondly, the fact that inflation expectations have remained relatively well anchored so far, that seemingly the public expects us to be able to do our job. That's a very helpful thing. But the question is, what's the appropriate confidence level? How do I evaluate this? Is it wishful thinking? And I think it's a lot more than wishful thinking. I think we've got reasons. Is it metaphysical certainty? We never have that. That's not part of the forecasting business. But the question is, how much confidence can we have that we're really going to get this time inflation to head back to the 2% that is our target and that we really should be committed to achieving? And I guess I want to bring up some reasons why it's okay to be somewhat confident, but it's a little bit hard to be highly confident, at least for some period of time. And the first point is that on the side of thinking that we actually have made a lot of progress, there's the unemployment rate. And the red line shows what the Congressional Budget Office thinks is the natural rate of unemployment, which is a very standard benchmark for what full employment would be. And what this graph says, according to a very standard benchmark, we're exactly at full employment. So that would be complete success. And I'm going to take a couple of slides to basically say why I think we actually haven't gotten as low as we should be, that there's some reasons why unemployment should go even lower. But let me just digress for a second about wage growth. Wages have been sluggish in the U.S. The blue line shows one measure showing the average hourly earnings. It's a monthly number. The red line shows the employment cost index, which one of the hopeful signs is that the data that came out just recently for the first quarter did show a modest acceleration, which is quite to be applauded. That was a very helpful sign. But we're probably still far away from where we need to be. And I took a very gross guess about where that ought to be. That's what the green shaded region would be. That's somewhere between 3 and 4% growth in wages. That would be what you would say if we thought we were hitting our 2% inflation target, and then added on to that 1 to 2% for productivity growth. We should be somewhere between 3 and 4. Would be a reasonable guess. So we still are below that at the moment. Another digression, which is a very interesting one, which is that I said 3 to 4 is the right range for inflation, or pardon me, for wage growth. But that really is dependent on the idea that labor's share is constant. And that's something that generations of graduate students have learned as a stylized fact about the macroeconomy, is that the share of costs attributable to labor have been constant through time. I think this idea goes back to Paul Douglas in the 1920s, finding that for the US economy and for other economies it was quite stable. And it had been quite stable for a long time, but basically over the last 15 years it's actually dropped quite a bit. And this is one of the bigger unanswered questions, and depending on how you think about this question really does change your view on what you ought to be seeing for wages. If you thought it was just natural that we're going to continue to drop in labor share, that a bigger slice of the pie is going to be going to capital, then actually low wage growth would actually be the norm, and maybe where we're supposed to be. On the other hand, if you think that this will eventually go back to where it used to be, that we have sort of revert to sort of long-run constancy, then we need wage growth to be even faster than 3 to 4% in order to achieve our 2% target. So that's one point why I think there's at least some uncertainty about where we are in terms of the inflation forecast. Another one is that the unemployment rate's not the only measure of how the labor market is doing. Another one that's gotten a lot of attention is labor force participation, which has been dropping a great deal. Just to sort of summarize my view on that is that I think most of the drop in labor force participation is because of demographics and other long-term trends, which are completely predictable. And in fact, I have a paper from 2001, which is one of my most obscure papers, but basically it predicted this because you could see it coming in the data a long ways away. But not as much as we've actually gotten. And that even though the trend is down, it seems, according to Daniel Aronson, is my colleague at the Chicago Fed, he and I and 2 other people have a paper on this topic. We think that it's actually dropped below the long-run trend, and in fact, that represents some additional labor market slack over and above what the unemployment rate shows. I think that's pretty commonly a point that's made, but actually a point that I want to make today, which is maybe unique, is that the decline in labor force participation in the U.S. is not a uniform thing. It hasn't happened in the same way to all groups. And in particular, what's happened is labor force participation for young people has really plummeted. So when I was a teenager, and roughly in the same time frame that Dave was a teenager, most American teenagers had part-time jobs. That's become much less common over time. On the other hand, older people say, with gray hair like me and older than me, are actually working more than they used to. So there's been a change in the labor market in a way that moves from groups which traditionally have very high unemployment, like young people, to groups which have traditionally low unemployment, like older people. A similar point is that education levels in the US, while not going up as fast as you'd like them to, have been consistently increasing over time. We have a lot fewer high school dropouts as a share of the labor market than we used to, and a lot more college graduates. That's another factor which should be basically pushing down the natural rate of unemployment. So there's a few data points on that. We don't have time to go into the details of this, but what I showed you there is the share of the labor force in some different groups. You can see that the share that's 55 and over is going rapidly up. You can see that the teenagers are going down. And then on the other side of the graph, you can see that the unemployment rates for teenagers are always very high. So 15 to 20% unemployment for US teenagers is basically the norm, whereas for older workers, they tend to be much lower than average. So that switch from the groups which have high unemployment traditionally to the ones who have low unemployment should be pushing down the aggregates. And in the interest of time, let's not go into it, but it's the same story basically for education, that the greater share of college graduates should be pushing down the natural rate of unemployment. So if you do this analysis that we did in a recent paper, try to take into account the change in age, sex, and educational attainment distributions, and you say that the CBO, the Congressional Budget Office, had things approximately right back in 2005, and you think they had approximately right in terms of the sort of damage that was done to the labor market by the Great Recession. So a key point is that recessions, as bad as the one that we had, tend to have some permanent influences and push up unemployment if you take their numbers for that, but you also take into account that change in the composition that I've been mentioning. The answer is you ought to be at an unemployment rate of more like 4.9% rather than the 5.4 that we are right now. So, maybe this is a small point, but basically I think there's pretty good evidence that the U.S. economy has more room to continue dropping unemployment before wage pressures would begin to emerge. Right? And in fact, we did various kinds of sensitivity analyses. There's many ways you can do this. Most of the ways that I think you can come up with reasonable estimates come up with a number between 4.75% and 5%. There are, though, some measures which would come up even lower. I mentioned one that we came up with, which would be as low as 4.3. That's not one that I think is necessarily right, but I'm not sure exactly why it's wrong either. It takes into account looking at what's actually happened with inflation data over the last 25 years. So I think, again, at the very least, there's a lot of uncertainty about where the level of full employment is. So if you're counting on unemployment getting to 5.4% as a reason why inflation is likely to go up, I think you're basically should be humble about such forecasts. Anyway. There's lots of other measures of the labor market. I listed some of them on this table. I guess the general point is that this is what the right column shows basically how far from the horrible position we had back in 2009 to today, how much progress we've made. So I would say for the unemployment rate, we've made 86% of the way back to where we should be. Most measures we've had substantial improvement, but there's a few, in particular, say part-time for economic reasons, that haven't made as much improvement. That really there still are lots of people in the U.S. who, all having a job, don't have a job that's keeping them as busy as they want to be. And that's a reason why I think the labor markets probably aren't quite as tight as the unemployment rate would say. So that's my story on the first factor, which is tightening labor markets. Quickly on the question of whether inflation expectations have remained anchored, I think the news is mostly good, but there's at least a little reason for having some uncertainty. When you look at consumers and you ask people what they expect for inflation, probably the most important line to focus on there is the one over the next 5 years. That's the red line. I have to say that's a victory. Then consumers continue to have basically the same expectations for inflation as they had in the past. Now, the fact the number is not 2%, maybe that's not 100% of a victory, but that's just the way things are. And so inflation expectations for consumers seem to be pretty stable. When you ask the professional forecasters, there's also some good news. And in particular, if you focus on the red line on the left and you ask them, what do you expect inflation by the Fed's preferred measure to be? For the last 3 years, they've said 2%. So that's exactly what we would like them to do. And so that's a great victory that at least the professionals tend to think the Fed is going to do the right thing on average over the next 10 years. If you were going to quibble, though, a little bit, you would maybe point out the fact that the other big measure, the CPI, the Consumer Price Index, they haven't been so stable, that those numbers have actually moved down a little bit. So on net, professional forecasters are probably slightly less reassuring than consumers. And then the one that's the least reassuring, but maybe not so horrible either, is the data from financial markets on TIPS inflation compensation. You can back out an estimate of inflation compensation from financial data comparing index bonds to non-index bonds. And a few months ago, I was more worried because the red line showing needed compensation for inflation 5 to 10 years from now had dropped quite a lot. It's bounced back, but it's still low. So ideally, you'd like these data to be more stable than they are. I don't want to make a big deal out of this, but I think it's at least a reason, again, to be at least a little bit uncertain about whether inflation expectations are going to be strong enough to pull us back up to 2%. Okay, maybe just a touch about what the outlook for the real economy is, because we need to know how strong the economy is to have a sense of whether it needs the level of accommodation that the Fed has been providing to it. If the underlying forces of the economy are strong, then we don't necessarily need highly accommodative monetary policy. But over the last several years, we've had headwinds that we've faced. And in fact, we've had many disappointments. We've predicted stronger growth than we've gotten several times. The rest of the world, we've had some weakness in other economies, which has held things back in the U.S. And recently, we've had the run-up in the dollar. I would say, though, that the effects should be transitory. They shouldn't be long-lasting. I think we could probably look through this, although it's a concern going forward. Another big factor that was holding the U.S. economy back was our version of austerity, somewhat milder form than in Europe. But even in the U.S., there was some belt tightening on the fiscal side, which was restraining the economy. That seems like it's pretty much mostly over. The biggest one, I would say, that was holding us back over the last several years has been the fact that households had needed to fix their balance sheets. House prices dropping so much really put a lot of households into a situation where they really couldn't afford to spend at the levels that they had spent before, or even if they wanted to, sometimes they weren't able to get the credit and financing in order to do it. So household deleveraging, something hard to measure, seems like it was probably one of the big factors. And there, I would say we made lots of progress, but it's also uncertain whether there's much more to go. There's still lots of homeowners, for instance, whose mortgages are greater than the value of their homes, something which must make them reluctant to spend. Okay, and one way to sort of summarize the sort of question about headwinds is to think about what the natural rate of interest is. Very often people will say, oh my gosh, interest rates are zero. That's very unnatural. That's unusual. That's that's got to be extremely accommodative. But I think in order to really evaluate claims like that, you have to measure the actual interest rate relative to some benchmark of what is needed. I get the privilege in Chicago of fairly frequently talking to farmers, because our district has a sizable farm contingent. And often when there's a big bumper crop, the farmers will be, and then prices fall, the farmers will think there's something wrong about that there's natural, that there has to be high corn prices. Actually, the same thing is for interest rates. The economic forces that have hit the economy recently are ones which mean that the interest rates need to be low in order to get demand into alignment with supply. And so the question is whether the natural rate of interest has fallen, exactly how much it's fallen and where it is. So again, that leads to some uncertainty. So how do you handle uncertainty? The best thing would be is if we could be clairvoyant. I would love to be a mind reader and actually know what's going to happen for sure. If I knew that the natural rate of unemployment was really pretty high, and I knew that the natural rate of interest was also pretty high, then clearly the right thing to do would be to raise interest rates relatively soon and to raise them relatively quickly. On the other hand, if I knew the opposite, that if I knew that the natural rate of unemployment was low and I knew that the natural rate of interest was low, then the right thing to do is to take your time, raise rates later, and to do it more slowly. So what you want to do basically depends on some things, but what we don't actually know the answer to. So how do you deal with the fact that you're not clairvoyant? I think you've got to think about which mistake is the worst mistake. So if you make the mistake of being too late and just too slow to tighten policy, we know that story. That's not a good story. That's a story in which inflation might go somewhat above our target. It's a story in which we might actually eventually have to raise interest rates more than we would have otherwise. So it's not a good story, but it's a story that we know how to deal with. We raise interest rates, we fix the problem. The other story, I think, is a harder story. If we raise rates too early and we do it too quickly, inflation might be not headed back to our target in a clear way, and then we would need to sort of retract our increases, head back to the zero lower bound, and that to me seems like a much more difficult problem to deal with, which I think counsels towards having a high level of certainty before one actually tackles the problem of raising interest rates. And if you feel like it, my boss Charlie Evans and two of my colleagues have a very nice paper talking about this. It was presented at the Brookings Institution recently. Thank you.
Thanks. So now it's your turn, Livia.
Okay, so just before my slides appear, let me also thank the Global Interdependence Center, BBVA, also the Foundation, Rafael Del Pino, for the invitation. This very nice setting. So it's also great to be in Madrid. Although I have to warn you that I'm a Juventus fan, so I'm not going to root for Real Madrid tonight. But I hope you forgive me for that. So this presentation is about the euro area outlook, and as also my colleague Massimo Rostani this morning, I have to highlight the disclaimer that the views expressed are strictly personal. So what I'm going to quickly talk about is two things, basically. First, I'm going to go through the euro outlook, where we see signals of a cyclical upswing. Inflation expectations have stabilized, and also there are, as we all know, downside risks. But I will also touch upon the long-term challenges of the euro area, where the economic performance is still dented by the legacy of the sovereign debt crisis, as I will show, where we see little evidence of intra-euro area convergence since 1999, and where there is some encouraging evidence of structural reform, but we think is still not enough. So these are the main messages. So let's go a few minutes over the euro area outlook. So these are the key messages for euro area activity. So the short-term growth dynamics are pretty good. So the first derivative is with us. In particular, the indicators confirm the leading role of private consumption for the recovery, while the recovery of investment is weaker, but is likely also to continue as well. And in the short term, the downside risks have largely diminished or disappeared. So these, the survey data point to relatively strong real GDP growth at the beginning of this year. I mean, one indicator which is often looked at is the PMI. It is pretty much in positive territory, but also consumer confidence has gone up quite a bit. This also seems to be relatively broadly based. So we see a strengthening both in industry but also in services. And again, as I was mentioning, the role of consumption is crucial at this stage, and we see in particular strengthening of retail sales, including car sales, I mean, on the right side, you can see the strong recovery of durables. So this is particularly noticeable because durables consumption is more cyclical than non-durables. So it's a strong indicator of upswing. So if we want to understand what are the drivers, so not everything can be attributed to ECB policy measures, though we like to think that they are, but you know, especially the recovery in consumer confidence. I mean, this is related to the fact that consumption is the driving force of the recovery. It appears to be due to a large extent to oil prices and also to the still slow but proceeding recovery of employment, so the fall in the unemployment rate. So these two factors are very tightly correlated with developments in consumer confidence, as these charts show. As I mentioned, labor markets continue to improve. You know, employment is growing and employment is falling, but they are doing so at a very slow pace. So that's one major source of concern. So these are the real GDP forecasts. I mean, they're all in the range of around 1.5% this year, and maybe, you know, almost 2% next year. Yeah, so they are quite indicative of you know, a sizable recovery. What about prices? So the inflation seems to be on upward trajectory, and there is some evidence of a turnaround in inflationary pressure. I mean, partly this assessment is due to survey-based expectations, which have increased slightly, and the market-based indicators have stabilized. It also a little bit increased in April and May. I mean, we shared the concern also by Daniel that these indicators, especially the market-based ones, are volatile and not hard to you know, to interpret, but still there is a sign of stabilization. So these are the recent HSCP developments. Of course, the you know, consumer price developments are very much driven by oil, also in the euro area, despite the fact that we are not, well, also due to the fact that we are not oil producers as much as the US now. So we import oil, but if you see the, you know, the orange line, which is basically core HSCP, so HSCP excluding food and energy, this has been pretty stable, admitted at a relatively low level. So we don't see much change. It seems to be quite stuck at a level quite below 1%. So these are the latest HSCP inflation forecast, and here there is a little bit more heterogeneity. So I think the last ECB staff projection is a bit on the high side in the range of available forecasts at 1.5% next year. I mean, of course, in case of inflation, we have to look really at the outlook next year and the next 2 years. I mean, the inflation rate this year, of course, is going to be on the very low side, and we know that. So we are more looking at 2016. But there are other institutions that have a lower inflation forecast, not in the IMF. I mean, there was a discussion in the last annual meetings, IMF annual meetings about this. So the IMF is more pessimistic than we are on inflation expectations. Is also an interesting development that if we look at the price of inflation protection vis-a-vis price of deflation protection, so we see that after the announcement of the purchase program, there was a sharp fall in the price of deflation protection, while the price of inflation protection remains very low. So this indicator seems to suggest, I mean, if you believe in this indicator, seems to suggest it was a decline in the kind of deflation scare, kind of the decline in the, you know, market scare of a deflationary episode. In the case of market-based inflation expectations, so these have stabilized across long-term maturities. So what is notable there is that if you you know, believe in these numbers, if you take these numbers at face value, so this number will tell you that you know, inflation is going to go back to 2% in a very long time. So we are not sure how much, you know, how much you have to trust these headline numbers. Also, because if you look, for example, the consensus forecast, so people, you know, ask directly about forecasts. So the path towards a level which is more consistent with the definition of price stability seems to be much quicker than you can read in the market-based inflation expectation indicators. So that's I mean, so at ECB we face problems which are quite similar to the Fed, what this Fed is facing. Finally, last but not least, there's been a quite significant recovery in loans to the private sector, so both to households and non-financial firms. So the recovery in the bank lending has been ongoing. So let's spend like a couple of minutes or more on the long-term challenges of the euro area, which you shouldn't forget, despite the cyclical upswing. So I'm going to show you a few long-term comparisons since 1999. So I work in the international department of the ECB, so we are fond of making international comparisons. So as a caveat, this is illustrative only. And also this is part of a research project where we consider the euro area countries individually. So the averages for the euro area that I'm going to show you are the simple arithmetic averages of the countries. So it's not weighted by GDP. And of course this is not official ECB data. So this is just my own computations. So if you compare, for example, so in the charts I'm going to show you now, so the euro area will be red. And if we compare the euro area to key other advanced economies like Japan, US, UK, and always on the left-hand side you have the euro area vis-a-vis partners, and on the right-hand side you have what we in DCB call stressed and non-stressed countries. It's not a super nice expression. I mean, sometimes these countries are called core and periphery, although we don't like this expression in DCB. But basically, the green line is always going to be the so-called core, and the red line, the red dotted line, is going to be the so-called periphery. So if you look at real GDP, you really see, I mean, especially if you see on the chart on the right-hand side, you see immediately the sharp deviation since the euro area sovereign debt crisis between the so-called core and so-called periphery. What has been really disappointing in the euro area, especially in the stressed countries, has been the development of TFP. Now, there is a lot of problems in estimating TFP. I personally don't believe very much that these numbers actually show TFP. So this is an estimate which we take from the OECD. But so despite this caveat, there is a clear indication that the euro area as a whole is underperforming on TFP, so on total for productivity. Employment is also has been disappointing over time. So as you can see on the left-hand side, the euro area, the red line, is very much below the other economies. So we have a lower employment share. And this is particularly so again in the so-called stressed countries. So really a low and falling employment, which of course is not only due to structural factors, it's also due to cyclical factors, as you can see on the next slide. So there's been a sharp increase in unemployment in the euro area, and again, this increase in unemployment has been largely localized in the stressed countries. I mean, of course, in this country it's very high, although it's falling, the unemployment rate, while you don't see really an increase in unemployment in the non-stressed countries. One quite worrying statistic, in my view, is the taxes as a share of income. So the euro area is a high tax place, okay, and so it's hard to believe that high taxes are not associated with low growth. I think there must be a link. Then turning more to evidence of structural reform. So if you look at the OECD indicator of employment protection legislation, so this measures how regulated the labor market is. So higher number means more regulation. You see left-hand side chart that the euro area is more regulated than the rest of the key advanced countries. But you also see a sharp improvement, in particular in the stressed countries. Of course, this is largely an effect also of the programs. So it's driven by countries under a program like Ireland and Portugal. But this is a notable development in the area of labor markets. There's been an improvement, so a tendency towards deregulation. But these are interesting. Is only in the stressed countries, not in the core countries, so-called core countries. Product market regulation also has been falling. And there, I think the euro area is not just an outlier compared with kind of partner countries. Again, falling both in non-stressed and stressed countries. And finally, It's also interesting to look at income distribution. I mean, this morning somebody mentioned Piketty's book as a book not being read, both but not read. But which is also my case. I know I didn't buy it. I have it, but I didn't read it because it's. So I'm guilty of that. I admit it. Also because by the way, I've read too many articles criticizing it before having the book. So when I received the book, I already knew that the book was wrong, and so that's why I didn't read it. In any case, I mean, it's interesting. I mean, we are starting also in DCB to look at income distribution. I mean, this is one I think key merit of Piketty's analysis is that he has raised this question as a key question. So we are preparing actually a paper for a conference in the European Commission on this topic. And I mean, as you can see, I mean, on the left hand side, if you measure income distribution by the Gini coefficient, where a higher Gini means more unequal income distribution, there's been a tendency towards more unequal, more inequality over time. And the euro area is a bit in the middle between more equal societies like Japan and the more unequal societies like the Anglo-Saxons. And also interestingly, this upward trend and also upward level is more visible in the stressed countries. So in the so-called periphery, there is more inequality than the so-called core. I think I can stop here. Thank you.